After a year of above average price decreases for most cars, the market might bounce back soon. There are early indicators that the rate at which prices are falling is decreasing. And this is key information if you're in the market for a new car, are planning to sell your own car, or simply care about the value of your car. Buyers shouldn't wait too long, as they could be facing higher prices in the future, while sellers shouldn't price their car too low, hereby risking a sale under the market value. In this video we'll have a look at all the indicators that are pointing towards a market bottom, and of course also discuss why there might not be a market bottom. We start with the most obvious indicator, the prices themselves. You see, car prices have been decreasing quite a lot during the last year, and in many cases more than usual. Now, however, as prices are approaching pre-pandemic levels, there are some price trends that show the first signs of bottoming. Let's have a look at them. We start with the Cayman 981 market. Over here you can see the price trends for the base, S, GTS and GT4s. Up until the spring of 2022, prices were either increasing or stable in this market. But the price trend turned negative and prices started to fall. So far nothing new. What is new though is the decrease in the decrease rate. For the cheaper models it is slightly more difficult to see due to the scaling, but it's clear that prices hardly decreased between November and February. For most models they were stable. The same applies to the 718 Cayman market, but only to a few models. Over here we have the price trends for the GT4 and the S's, and we can see that the pattern is the same. Prices were fairly stable during the last 3 months. Also prices in the McLaren 570S market fell at a slower pace between December and March. We can clearly see that the decrease rate decreased and that the median price didn't change. Admittingly, the evidence over here is weaker than in the Cayman market. It is only the top of the confidence interval that stabilized, while the lower one continued to fall. Even prices for the latest generation Panamera show signs of bottoming. Have a look at this. Between November and February, S prices didn't change at all, while base prices dropped by only 3%. And this contrasts to the -7% for both models in the preceding period. I looked a little bit deeper into this and found that this flat development is mainly driven by new cars that are added to the market. However, even when you track the same cars over time, you can see that the decrease rates are decreasing. Now this pattern of smaller price decreases is something that I've seen in the markets for which I updated the data during this month, March. But it definitely doesn't apply to all markets. Prices themselves are then also not always the most accurate predictor for future prices. They're of course a result of demand and supply, but change with a small lag. In general, I found that the time that a car is advertised for sale reacts much quicker to changes in the market. It is also much more reliable, of course, than only the supply level. After all, it relies on both supply and demand. Now what we have seen historically is that the advertised times plummeted when prices soared. Cars were selling extremely quick. Halfway through 2021 though, the trend turned and cars were selling slower and slower. And this trend reversal happened way before the reversal in the price trends. Since mid-2021, the advertised time has been increasing, but we can see now that there's a select number of cars for which the situation stabilized. Let's take a look at the 718 Boxster S as an example. As we just discussed, we can clearly see that the advertised time decreased when prices soared and started to increase slightly before the price peak. More recently, the balance returned. The advertised time stabilized at approximately 55 days, and this could mean that the decrease rate in the prices will start to come down. Data to calculate this trend and the ones that you will see later in the video is very kindly provided by Autotempest. Autotempest conveniently pulls listings from a bunch of different websites into one place, so that you can browse through all of them. Check out the links in the description to find the Boxsters for sale right now. Now so far we discussed that for a few select cars, price trends started to flatten and that advertised times stopped to increase. All signs that depreciation rates might be lower going forward. But we mainly focus on exotic cars. This is a video about the exotic car market after all. If we forget for a moment about $1 million F40s and Carrera GTs and look at the more affordable sports cars, we cannot deny that there's a significant correlation to prices for normal used cars. and prices for these normal cars soared during the most recent months. Have a look at the Used Vehicle Value Index from Mannheim. The index shows the development in the wholesale prices for used vehicles. I'm sure you've seen this graph before if you looked any video about car values during the last year. Now if we zoom in to the most recent period, we can see that prices decreased significantly from the market top, but bounced back fiercely. Prices are up by 9%, and we will discuss the drivers behind this increase in a separate video. For this video though, it functions as another reason as to why values might increase in the more exotic car market. After all, cars like Boxsters and F-types are, for example, not completely immune to what's happening in the normal used car market. Price trends for classic and real collectible cars might of course deviate significantly. And contrary to some of the price trends that we already saw, prices for most collectibles aren't increasing. But according to the Hagerty market rating, the market remains very strong, especially in the upper segment. In case you don't know Hagerty, they're a niche insurance agency for collectible cars and have grown to the largest membership organization for car lovers. Their affinity for numbers is then also reflected in the market index. It's not just based on an average price over time, it's more rounded and a bit more complex. Consequently, it's less intuitive than the average over time, but much more reliable as it filters out a lot of noise. Their market rating conveys the classic or collectible car market performance as a number that can sit between 0 and 100. You won't be surprised to find out that the higher the number, the hotter the market. Most of the time, however, it's likely that the score sits between 40 and 60. The scores over time are namely expected to follow something called a bell curve. And this means that, over time, scores are most likely to fluctuate around the mean of 50, while the chances of being higher or lower than 50 decrease symmetrically when you move away from the middle. An additional benefit of this is that the rating moves fluidly in the 40 to 60 range, but becomes much more difficult to move at its extremes. If we then look at the development over time, we can see that the rating topped in June 2022 and has been decreasing ever since. In March it was 72.85, and as we just covered, this means that the market is still somewhere between expanding and superheated. In simple terms, this means that the market is strong, but not as strong as during last summer. But what caused the market pivot and the most recent drop in the rating? Unfortunately for us, Hagerty doesn't provide the exact way in which the rating is calculated, but they do provide enough information to get a rough idea. The index is rather smart, as it uses the weighted average of 8 different components, and these are in order of importance: the Hagerty Price Guide editorialized values, auction activity, expert sentiment, the Hagerty Price Guide indices, private sales activity, insured values for the broad market, insured values at the high end, and correlated macroeconomic indicators. Now compared to the market top, basically all metrics are down, and compared to February, only the macroeconomic indicators are up thanks to an increase in the S&P 500. So yes, this also means that collectible car prices came down. The median value of the 100 most insured cars is, for example, at its lowest point in 2 years, and this is roughly in line with the price trends that we saw earlier in the video. However, the market rating doesn't yet include the result of the Amelia Island auction. And this was, again, a record-breaking auction. Hagerty digged into the auction results and found that the total sale volume was with 178 million higher than ever. Yet, a key driver of this was the quality of the cars. Almost half of the cars were evaluated as being concours ready, and around 12% had an estimate of $1 million or more. So the focus was very much on high quality cars. And this seems to resonate with their earlier observations of the January auctions, and in fact even from before that. Special cars or cars with unique history sold well, while more normal collectible cars were not going for top dollar. Therefore, the market is diverging. And this could very well apply to what we saw earlier in the video. So we explored a lot of data and investigated several reasons why the exotic car market might be rebounding soon. Some price trends started to flatten, The advertised times are not increasing anymore in all markets, hereby highlighting that the scarcity levels are no longer decreasing. Wholesale prices for normal used cars are way up, and Hagerty's market rating is still strong, albeit falling, and certain segments of the collectible car market continue to perform very well. Yet, there is of course also a significant risk that all of these are just false signals and noise. There are plenty of reasons as to why prices could continue to fall at the current rates. First of all, when it comes to the flattening price trends that we saw and stabilizations in the advertised times, we need to be aware that these trends apply to only a select number of cars. On an aggregate level, price trends are still falling at the same rate, and advertised times are still increasing. We saw, for example, 3 weeks ago that modern 911 prices are still falling, and last week we saw that the same applies to the Boxster market. If I pull up the advertised times in the 911 market, we can see that in general the trends are still pointing up. They are also heavily correlated. They decreased at the same time, bottomed at the same time, and started to increase at the same time. The same goes for the Cayman market. Trends for all generations moved in parallel, and also in the same way as in the 911 market. Another thing that we need to take into account is the current economic climate, and especially the interest rates. Rates for new and used cars continue to increase. The one for used cars even reached 14%. Especially for cars where money does play some role, like let's say for your average 911 buyer, this can have a big influence on the buying decision. Moreover, it shrinks the potential pool of buyers. The credit availability index plummeted since last summer and is now at the same level as in 2015. Now finally, we need to be aware that most of the recent developments in the indicators could be the result of seasonality. Car prices tend to increase in the spring. The weather improves, and this is typically a good thing for sports or supercar demand. Additionally, tax refunds could play a role. On average though, this only has been $3,200, so it might explain some individual cases, but I think it is unlikely that this amount moves a supercar market. But as a buyer, seller, or owner, what do you do with all of this conflicting information? On the one hand, we have some early indicators that the market might be bouncing back up, while on the other hand, there's plenty of data indicating that the developments might be noise and are unlikely to represent the beginning of a pivot. Nobody can predict with 100% accuracy if the market will go up or down, and I'm not advocating for one or the other. Whatever you do, do not interpret this video as one in which I'm ringing the bottoming bell. I do think though that now is the time to step up and closely monitor the market of your interest. For the first time in basically a year, there are some signs that the price dynamics might change again. And if you are at the forefront of this, you can of course use it to your advantage. But what do you think? Will we see a change in price dynamics anytime soon? And if so, in which direction? Let me know your thoughts down below in the comment section. And with that we arrived at the end of this video. Now if you enjoy this data-driven way of analyzing car markets, but would like to see an analysis for a very specific market, like let's say the one for the 911s, head over to my channel. Over there you'll find detailed market analysis for a large variety of cars. Can't find the car you're looking for? Let me know the name of the car down below in the comment section. Once there are enough requests for a certain car, I'll make a video about it. As always, thank you for watching, and I hope to see you next week for a new video.